Welcome to the deep dive. You've given us this stack of sources, and our goal is really to jump right in, try to cut through the noise a bit,
Exactly.
and pull out those key insights so you can get informed, quickly and thoroughly.
Yeah, think of us as guides, maybe, through this information jungle. We're here to help you spot the patterns, understand what really matters in the material you sent over.
And for this deep dive, we've got quite an interesting mix. Our articles, headlines, mostly pulled from CoinMarketCap, dated June 7, 2025. So it's a real snapshot.
Right, a specific day.
Yeah, a snapshot of the crypto and tech world then.
And our mission, well, it's to unpack these different pieces. You've got specific price predictions, company moves, market sentiment stuff.
Even a tech giant's AI update snuck in there.
Right, and synthesize what it all tells us about the forces at play.
Okay, let's get into the stack then. The article highlighted in the title, that one grabs you straight away. Ondo price prediction 2030 hits $7.84 high, but Qubetics targets high ROI by 2025.
Yeah, starting there is interesting because it immediately throws up two totally different timescales, different goals. You've got Ondo with the specific price target, $7.84, but way out in 2030.
And then right alongside it, kind of in contrast, is Qubetics. And their focus is much, much nearer term, right? High ROI, specifically by 2025.
Exactly. Seeing them side by side like that and the sources you provided, it's a great little indicator, isn't it? Shows the different time horizons and maybe risk appetites active in the market on just one day.
Yeah, some looking really far ahead, others aiming for returns much sooner.
It's definitely not everyone marching to the same beat, not looking at the same clock.
Okay, let's shift to some of the company and market structure news in these sources. Arca and Circle, what's the story there?
Well, it seems Arca divested, sold off all its shares in Circle.
All of them. And the reason given in the source?
An IPO allocation dispute. That's what's cited. Which is quite interesting, actually. For a firm like Arca to just completely bail on a major player like Circle because of an IPO allocation disagreement. Well, it suggests these partnership things, these structural issues, can cause pretty major breaks.
Not just minor bumps.
No, exactly. And the sources mention it impacting USDC's market reaction, too. So it just highlights how interconnected everything is and how these disputes can send ripples out.
Then there's news from Coinbase, one of the biggest players, addressing user problems, specifically account freezing, right?
Right. And the sources point to the CEO, Brian Armstrong, talking about this. And there's a key number mentioned, an 82% reduction in those specific issues.
Wow, 82%. That's a very specific, pretty significant number to see reported.
It really is, isn't it? For a platform that big, tackling something users really care about, like frozen accounts, and claiming an 82% improvement, well, it's just a major focus, operationally, on fixing that user experience.
Makes sense.
And it also mentions a pledge for, more improvements, more transparency. So they're saying it's not done, it's ongoing, building trust.
Okay, now let's talk about a corporate move that feels maybe strategically bolder. The story about Greg Kidd and No Labs.
Ah, yes. This is where we see a different kind of strategy at play. Greg Kidd is acquiring a controlling stake in No Labs.
All right.
And he's using a mix of Bitcoin and cash to do it.
And the result is he becomes CEO and chairman?
Yes, but the detail in the sources that really leaps out, I think. It isn't just the leadership change or even using Bitcoin in the deal itself. It's the strategic direction change for No Labs.
What's that?
They're adopting a Bitcoin treasury strategy. The plan mentioned is for Bitcoin to make up, get this, 82% of their market cap.
Hold on, 82% of their market cap in Bitcoin. That's more than just diversification, isn't it? That's basically pegging a huge chunk of the company's value directly to Bitcoin.
Exactly. That specific 82% figure is, well, it's eye-popping. It signals massive conviction in Bitcoin as a core treasury asset. Maybe trying to attract investors who specifically want that Bitcoin exposure via a public company.
It's certainly a very tangible and you could say aggressive example of that corporate Bitcoin adoption trend.
Definitely.
Okay, let's shift gears again. Market sentiment, trading examples. There's a headline here about whales go all in on BTC calls.
And this piece, interestingly, links that whale activity directly to some positive macro news from the Friday before, specifically the U.S. jobs report for May.
Ah, okay. What did that show?
Well, the report indicated 139,000 jobs added, which apparently beat expectations. Expectations were around 125K.
So better than expected.
Yeah, and unemployment held steady at 4.2%. The sources draw a pretty clear line from this positive economic data
Right.
to increased optimism among the big crypto holders, the whales. and suggesting this optimism showed up as big bullish bets, the all-in on BTC calls, expecting Bitcoin's price to go up.
So it's an example of how broader economic news can be seen as a direct trigger for crypto trading behavior, at least on that day, according to these sources.
Precisely. That's the connection being made.
And then contrasting with that kind of broad whale sentiment, we get a really specific high-stakes individual trade mentioned, someone named Ogle betting against Trumpy.
Yeah, the sources get quite detailed here. Ogle's shorting the Trumpy asset using $1 million on the hyperliquid platform.
And with leverage, too.
Yep, 10x leverage mentioned, which critically puts the liquidation point at $12.49. And the source notes the price was hovering near that entry range at the time.
Oof, 10x leverage, risking liquidation that close. That's playing with fire.
Well, it certainly highlights the micro-level risk-taking, doesn't it? You've got this very specific, high-conviction, highly leveraged trade described in detail. It sits right alongside the big corporate strategies and the macro-driven whale moves, shows the whole spectrum of activity.
And finally, this collection also had a quick mention of the wider tech world. Google announced a preview of its enhanced Gemini 2.5 Pro.
Right, described as their most intelligent model so far, an improvement on the last version.
It's not crypto, obviously, but seeing it included is maybe a reminder that all this innovation in crypto is happening at the same time as these massive steps forward from the tech giants in things like AI.
Yeah, it's all part of that bigger technological change landscape.
Absolutely. So this range of information, when you see it all pulled together like this, it's quite something. It really raises a question for you listening in. What do you make of this mix? You know, from crypto predictions with different timelines, major corporate plays like the No Labs Bitcoin treasury, platform fixes like Coinbase hitting that 82% number, high-risk trades linked to macro news. What stands out to you? What feels most important for your understanding of the market right now based on this snapshot?
It's a good question to ponder.
So let's try to wrap this up. From this specific set of sources from June 7, 2025, we've covered a lot. Predictions years out, companies making huge strategic bets like No Labs with that 82% Bitcoin allocation.
Platforms like Coinbase flagging big operational wins, like that 82% reduction number.
How macro events like jobs reports get linked to big crypto trades.
And even down to the nitty-gritty of individual high-leverage bets, like that $12.49 liquidation price point.
Looking at all these pieces together, it's not about finding one simple answer, is it?
No, I think it's more about appreciating the sheer diversity. Different forces, different motivations, different time scales, all churning away in the market on any given day.
So here's a final thought drawing from all this. Consider that strong corporate conviction, like No Labs putting 82% of its market cap into Bitcoin. Put that next to maybe broader market optimism tied to jobs numbers, and then throw in the sheer individual risk seen in that $1 million 10x leveraged short aiming near a specific price. What does that particular combination tell you about the complex, sometimes contradictory forces driving this market right now? Which of these threads we talked about feels most likely to be influential for you going forward? Something to think about.